Hi, this is Acme with the Bulletin Board Heroes here at Fox Markets for Friday, the 11th of March. Starting off with Aminex, which seems to have done some good technical work over the course of 2022 to date. We found new support at old resistance around zero point 0.8 and rising 50-day line, and also the shares in recent days finding support above that rising 50-day line, which means that we should be set for a breakout. The breakout could head as high as 1.8, 1.9 pence at that 1 year resistance line projection on the daily chart. Upside valid while we hold above, at least while we hold above 0.8, and it would be disappointing if we even went below the 0.85 level over the near term. Onto a stock which is displaying what can be a decent charting signal, which is unfilled gap to the upside. Here we've got Castillo Copper gapping up here, almost like a bear trap reversal. Initial target here up towards that resistance line there from July at 1.4, but we're looking for maybe December, January resistance around 1.6, 1.7, especially given the way that copper and metals prices are roaring at the moment. An RSI support line as well, which is effectively a bullish divergence line, should also back the idea of recovery, especially while there's no break back below the 1 pence level. On to another nice looking setup from a stock which doesn't get much airtime. Here we've got Cornerstone, which has broken that triangle on the daily chart from July at 17 pence. Hopefully the shares would at least travel back up towards the bottom of the January gap at 28 pence over the next 4 to 6 weeks, and best case scenario I suppose would be to fill the top of the gap at 34, but let's just go over 28 at the moment while we hold above 17. Bullish divergence line there in the RSI window from back in August, so that might also power the stock a bit higher over the near term. Bumper RNS from Deep Verge today, a £5 million number mentioned in that from Modern Water, and here we've got a situation where shares looked as though they sort of overshot on the downside. We had a very oversold RSI there down to sub 20, which is the most it's been, or the most oversold it's been for a year. And gapping within that triangle does suggest that there's going to be some decent momentum. Initial target there up to the 50-day moving average, which was obviously post-October or October to January support. And best case at the moment up to 23 pence by the end of next month, which is that November resistance line. Upside valid at least while we hold above the gap around the 14.5 pence level. Otherwise, one would expect more base building. Moving along to Keras, which seems to be back in business today. Here we've got a gap close signal after the gap down that we had in January, so that's nice. And above the top of that gap at 0.04 pence. Looking for the shares to maybe get to 0.06, 0.07 by the end of next month. But it looks as though they certainly are, or have been, right on the bottom of the range. Stock which was rather nasty to shareholders, I think last year, was Lansdowne Oil and Gas. But here, after an extended base building and a bit of bullish divergence there from that line from November, bear trap there at the end of last month. Finally, the shares are revived and reassembled themselves. Broken that line of resistance from July as well at 0.55, and above that looking for a line of resistance from April as high as 0.95 maybe by the end of next month. Obviously, the oil price waking up a lot of the formerly rather quiet situations in the oil sector. Macango, and a lot of people like this situation here. We've had a bear trap reversal from below February support at 23.5 pence. Above that, looking for the upper 20s, so February resistance of 28, 29, and maybe by the end of next month back into the low 30s after that bear trap that we have seen. Bullish divergence given the lower March support but higher RSI, so that should take the shares to the better levels. Osirium looked as though it was all over, but it looks as though things were looking rather pear-shaped for Osirium, but had a nice neckline break, W-shaped reversal there after a gap higher. And above the 6 3/4 pence level, we could head back up towards the 13 or 14 pence area, which was the initial 2022 support for the shares. If it goes to the shares now, maybe wait for an end of day close above the 50-day moving average at 9 pence before pressing the buy button. On to Pipehawk, which had a little bit of a slip below the 50-day moving average earlier in the week, but it's actually a gap, an island reversal now, with the gap down and the gap higher. So that does suggest that after a bit of a tree shake, we're back in business for the bulls and heading up towards the 40 pence target, which was, or even 45 pence target actually, which was derived from the July resistance line projection. So above the bottom of the gap there at 25 pence, looking for 45 maybe by the end of next month. Moving along to another company that's managed to deliver a decent update today, Pires, looking I think £1 million richer after the Get Visibility news. Here we've broken a line of resistance from back in February, and with a higher support there versus December above the 5 pence level, looking for a retest of 8 pence maybe by the end of next month, or perhaps even sooner. Moving along to another situation which is of interest on a charting basis. Here we've got Pembridge, which again had an announcement today, broken out of that triangle, broken above the 50-day moving average at 5 pence. And the best case scenario now, I think, is above, we're above 5.75, which was the initial 2022 resistance. We could retest 9 pence by the end of next month. That would be nice for holders, especially with the backing of a bit of bullish divergence after that initial March bear trap, which wasn't very friendly. Paired with Lansdowne, I suppose, is Providence, and here maybe not quite as difficult on this one as Lansdowne was, but we have broken a line of resistance there from back in July at 2.8 pence. Above that, we're hoping for maybe 4 pence over the next couple of months, although obviously there's a bit of a fear factor associated with both Lansdowne and with Providence. Finishing off with one of my personal favourites, just because I think, or have the idea that quantum computing could be quite big over the next decade. Here we've got Quantum Blockchain, which had a bear trap from below the January support at 1.9 pence. In fact, it was a bear trap gap reversal. We gapped down and then rebounded there. That should have shaken people out, and certainly has after today's gap to the upside. One can look towards 5 pence, which is a May resistance line, while we hold above the 50-day moving average, and the October resistance line at 2.5. So above 2.5, looking for up to 5 pence on Quantum Blockchain. That's it from me today. More updates over the weekend.